We're looking at potentially a 10-week high in terms of global equities in the close. Do you think it has much further to run, the rally in equities?
We're a bit skeptical on that, especially in the US. I think you've had a huge boost from yields, and the market has pulled forward a lot of that potential central bank put, which might not come, because if the labor market remains strong, if the economy doesn't have a recession, the pressure on the Fed to actually cut rates by as much as what the market is pricing is quite low. The market should price cuts, that's for sure, because you're late cycle and something going wrong is more likely than not. But at the same time, 100 basis points being priced, that's probably a bit too much, which means the rates picture might at some point become a bit of a headwind again, and that doesn't help US equities.
To be clear, when you say the markets are right to price in cuts, do you mean by the end of this year, or do you want to push that out to 2024?
So in terms of market pricing, we don't expect cuts until next year. But I think in terms of market pricing, it does probably make sense for the market to price already cuts this year. Because you always have to think in probabilities. And the challenge you have right now is that if something goes wrong, the Fed actually could cut very aggressively, just like they hiked very aggressively. So just a small probability of really large cuts means that the market needs to price some cuts. And from that perspective, we actually feel that it's not completely wrong that the market does price cuts this year already.